So, if you're a homeowner in New York, and I mean really anywhere, right? From the suburbs of Long Island all the way out to Buffalo, you've probably felt that sting when your insurance renewal notice shows up.
That's an understatement, yeah.
It stopped being just a boring piece of mail. It really has. It feels more like an annual financial crisis landing in your mailbox.
It really does. I mean, the volatility in the New York market right now it's just massive. And we're not talking about, temporary hiccups. This is being driven by some really deep structural changes.
Things like climate change, right? And rebuilding costs, and how insurers are just looking at risk completely differently now.
Exactly. It's a perfect storm.
So we took a really deep look at a bunch of current industry analysis, insurer reports, all focused specifically on New York State to figure this out. And our mission for this deep dive is to give you the most crucial, actionable intelligence from all of that.
That's right. The goal here is pretty simple. We want to move you past that general anxiety about, oh no, my costs are going up again, and actually arm you with some targeted strategies so you can understand precisely what is driving your premium up and, more importantly, how you can respond to it in 2025.
Okay, let's unpack this then. Let's start with the big forces, the core drivers that are really pushing these rates up. It seems like a convergence of a few factors that are just compounding the risk, starting with the environment itself.
The primary undeniable driver in New York right now is just the sheer increase in severe weather events. I mean, the frequency, the severity, it's all going up. State data shows more storms, higher coastal flood risks, just general instability.
So bigger payouts for insurers year after year.
Exactly.
We always focus on the big coastal stuff, right? The hurricane threats that make the national news. But the data we saw suggests that some of the most frequent and crippling claims in New York are actually those common winter events. Frozen pipes, these massive ice dams, winter water damage, especially upstate and inland. They don't seem as glamorous, but they must be incredibly costly.
They're the quiet killers on the insurance balance sheet. They happen every single winter. And the cost to fix all those smaller, frequent losses is really starting to add up.
And that's getting the attention of lawmakers, I hear.
It is. They're actively investigating the state's property insurance market right now, specifically because these climate-driven disasters, plus the affordability problem, are pushing premiums out of reach for a lot of people.
So it feels like we're being hit from two sides. First, the climate causes more claims, which is bad enough. But now those same claims just cost a ton more to actually fix. Is that second driver material and labor inflation acting as like an amplifier here?
Oh, absolutely. It's a huge amplifier. Just think about the basic economics of rebuilding your home after damage. The price for everything has gone up. Lumber, metals, roofing materials, and critically finding skilled labor. That's a big one. So insurers are paying out dramatically more for every single claim. And that cost inevitably gets passed directly back to you.
And while those costs are rising, it seems like insurers are getting a lot pickier.
That's a good way to put it.
What are we seeing in terms of their strategies, the market pressures?
We're seeing a significant tightening of underwriting standards. Insurers are becoming far more selective about the risks they're willing to take on in New York. And this shows up in a couple of ways. They might raise your deductibles so you take on more of the initial risk. Or in the most high-risk ZIP codes, think flood-prone areas or coastal storm paths, they're just pulling out altogether.
Wait, hold on. If an insurer just pulls out of a high-risk ZIP code, what does that actually mean for a homeowner who lives there? You can't just not have insurance. How is that not a massive political issue?
It creates immense pressure. It means those homeowners are pushed toward what are called residual markets or specialty carriers. And that almost always means paying much, much higher rates. Insurers are willing to take that regulatory heat because, for them, the underlying climate risk is just too high to cover profitably at standard rates.
Wow. Okay, let's pull back for a second and look at the national picture, because New York's problem isn't totally unique, even if we're feeling it really sharply. I saw a staggering statistic in the sources about the increase over the last 2 decades.
You're probably talking about the 20-year trend. Nationally, homeowners insurance premiums are up by 74% over the past 2 decades.
74%.
74. And to put that in context, home prices, even when you adjust for inflation, have only gone up about 40% in that same period.
Wait a second, 74%? That just feels fundamentally broken. Insurance is supposed to protect the value of your asset, but its cost is literally outrunning the value of the asset itself.
Oh, yes, it's a major problem.
And are insurers projecting this painful trend is going to continue for New Yorkers in 2025?
Unfortunately, yes. The projection for 2025 is pretty clear. Insurers are looking to raise rates by about 8% or even more in many areas, and they're doing that specifically to cover those rising losses and higher rebuilding costs we just talked about.
So that 8% number is a key baseline. If your rate hike is less than that, you might actually be beating the average.
Might be, yeah.
Okay, let's connect all these forces directly to your wallet, because this is where it gets really interesting. The data shows New York premiums are climbing even faster than the national average, and those averages hide some huge differences. So let's quantify it. What are people actually paying in 2025?
Well, the statewide average for New York is reported at $1,229 annually.
But like you said, that number is almost meaningless, right? If you live in a specific risk area or have a different financial profile.
Exactly. It doesn't tell the real story at all.
So give us the breakdown. What about the metro area and the coastal zones, where all that density and risk really spikes?
Okay, so if you're in the NYC metro area, you're immediately looking at average premiums somewhere between $1,700 and $1,800.
Right.
And if you're in a high-risk coastal zone, where hurricane and flood risk is the main concern, that jumps even higher, often between $2,000 and $2,500 a year, or even more.
Location is clearly a massive driver of cost.
Paramount.
But the sources we looked at highlight one driver that seems to be overshadowing even location in some cases, and that's your personal financial profile, specifically your credit score and your claims history. This is so vital for you, the listener, to understand.
It is probably the single most controllable factor that dramatically influences your rate. The data on this is really stark. Homeowners with excellent credit for a specific level of coverage are paying around $1,060 a year.
Okay, a little under the state average. Now, what's the difference for someone who has a poor financial profile?
If you have poor credit, that same premium skyrockets. It could exceed $2,400 for similar coverage.
Whoa! That's a shocking difference. That's almost $1,340 a year, based purely on your financial profile.
The risk modeling is that precise.
So if you have poor credit and you live in a high-risk coastal area, you're getting hit with this massive double penalty.
Exactly.
That could easily push your annual premium far, far above the state average, and maybe even force some people out of their homes.
It absolutely could. Depending on your location and your credit profile, a New York homeowner could easily be paying nearly double the national average. It just underlines the message. Your personal risk factors are being scrutinized more closely than ever.
Okay, so understanding the drivers and the costs is one thing, but action is what really matters. What does this all mean for you, and what are smart New York homeowners doing right now to get some control back over these skyrocketing costs? Let's dive into the action plan.
Right. The foundation of any good action plan is what we'll call Strategy A rigorous annual review and shopping process. The industry is just too volatile right now to assume loyalty pays off. You have to audit your coverage every single year.
So don't just assume your current policy is the best deal.
Never. Your scope, your location, your financial risk factors, they all change year to year.
So shopping around, switching carriers when you find a better deal, it's not optional anymore. It's basically mandatory financial hygiene.
100%. And you need to be aggressive with discounts.
Tell me more.
Use them all. The multi-policy discount for bundling home with auto is a huge, immediate win, but you should be maximizing everything. Loyalty discounts, non-smoker, having an alarm system. Every dollar you cut helps offset that 8% rate hike we talked about.
So if strategy A is defensive, playing defense, then strategy B is all about offense, mitigating risk directly. This is about making smart investments to physically protect your home. What specific upgrades do insurers actually reward with discounts, not just general maintenance?
You have to think about targeted, measurable risk reduction. The sources point to specific things. Installing storm shutters, for example. Having an updated, high-quality roof, especially one rated for higher winds or snow loads. Installing freeze protection devices. These are things insurers recognize as materially reducing the chance of a major claim.
Okay, and for New York, especially upstate or in that heavy snow corridor, we have to talk about water damage. What specific local upgrades make a real, tangible difference there?
Investing in proper sealants is a big one. Making sure your gutters are working perfectly, installing snow guards to prevent ice dams. But the absolute powerhouse for reducing common claims is internal water sensors.
You know, a smart water sensor might cost, what, a few $100?
Right.
Are you saying that one small strategic investment can materially lower your premium because it basically eliminates one of the most common and expensive claims in the state, a frozen pipe bursting?
I am. It's an incredible return on investment. A $200 smart sensor that can shut off your water main can prevent a $50,000 claim from a burst pipe.
Insurers know that math.
They know that math, and they reward preventative action that addresses frequent severe loss.
Okay, finally, strategy C, which is focusing on your financial and policy adjustments. We already detailed that huge credit score gap. Can we just reiterate that this is maybe the highest leverage financial action you can take?
Absolutely. Improving your personal profile, making sure your credit score is in great shape, maintaining a clean claims history, it is paramount. If you look at that $1,300 potential savings, it far outweighs what you might get from, say, a multi-policy discount. It's the highest ROI action you can take this year that doesn't involve a construction crew.
And what about on the policy side itself? What adjustment can someone make right now if they just need to bring that monthly premium down immediately?
The quickest lever to pull is raising your deductibles. If you switch to a policy with higher out-of-pocket costs, your premium will drop instantly.
But that's a calculated risk.
It is. You're taking on more of the smaller risks yourself, but you absolutely must have the emergency savings to cover that higher deductible if something happens. You're basically trading premium cost for liquidity risk.
And we can't forget about non-standard coverage. The standard homeowners policy just doesn't cut it anymore in New York's environment, especially near water or in those deep snow zones.
That is such a critical point, a huge gap. Your standard policy often does not cover flood, earthquake, coastal wind damage, or damage from a heavy snow load. If you're in one of those high-hazard areas, you have to budget separately for these coverages, often through the National Flood Insurance Program or a specialty carrier. Proactive means knowing these gaps exist before a loss happens.
So, to summarize our deep dive here, it seems homeowners insurance in New York is becoming more specific, more granular, and highly risk-aware. The pressure points are compounding climate plus inflation, and people in high-hazard areas are really shouldering the steepest costs. But maybe the biggest takeaway is that your personal financial profile, your credit score, your claims history is a bigger driver of your costs than ever before.
And that's where the power shifts back to you, the homeowner, but only if you're proactive. Making smart home improvements, focusing on financial discipline to boost your credit, and shopping wisely every single year. That's the only way to gain more control.
It's a huge mountain to climb, but at least the data gives us a map.
It does. And, this immense difference highlighted in the data leads to a kind of provocative final thought for you to consider. It's about where you put your valuable capital this year. We know there's potentially a $1,300 plus annual difference based purely on your credit score. And we also know that big structural upgrades like a new roof or new sealants cost thousands, but can also result in material premium reductions.
So where should a homeowner prioritize their resources right now?
Given those high stakes, where should you put your capital this year to get the largest possible reduction in your premium? Do you invest heavily in improving your financial profile, like aggressively paying down debt to boost your credit score? Or do you invest in an expensive physical home upgrade, like a new roof or structural water mitigation? It's a real question of accessibility versus long-term benefit, and it's definitely something to mull over on your own.
A fascinating dilemma, really, driven by this new landscape of risk. Thank you for joining us for this deep dive.
Always a pleasure.
Thanks for listening. If you're a homeowner looking for clearer, stronger coverage, Blue Rock Insurance Services is here to help. Contact us for a quick homeowner's insurance review and discover the protection that truly fits your home and your budget. Visit us online or give us a call. Stay safe, and we'll see you in the next episode.